Yeah, I'm losing my edge.
Today, Pete, though, we're going to talk about how do you trade gold and silver. Gold and silver been moving like mad. Didn't anticipate, though, new highs in both these products for the last couple of years of trading, with gold new highs again since this product started trading in the 70s. This question, it's going to be relevant. It's been relevant for the last month. I think it's going to continue to be relevant as these markets continue to move higher. But it's interesting, Pete. These markets, while they're moving higher, they pose a ton of opportunity, I think, on both sides of the market. You've got gold at over $2,000, and those are highs since 1970. But it feels like there's some good back and forth there. I feel like there's especially good back and forth in silver, and that's one that if you've been trading gold alone, you've really been missing out, because silver has gone to it's been as high in the same time span that I'm looking at the last few decades. It's been as high, Pete, and you can correct me, as maybe $45,
silver,
closer to 50 maybe. And right now it sits at highs for the last few years, but it's only at about $25, 26. Right. And so a lot of movement back and forth in that silver piece, especially. And so I wanted to ask this question, are you trading just gold, or are you trading just silver? Are you trading ETFs? Are you trading the traditional futures? Are you trading the micro futures? Because I want to kind of paint this portrait. Yesterday, I went over a little bit just the expansion in expectations, the exceeding expectations of /SPRE, the smallest precious metals product that mixes both in there. You can see here from the month of June to what happened in July, expectations of where this market can move have increased by almost 100%. And today alone, you're seeing a move of $2.25. And so these expectations continuing to be exceeded day after day in this small precious metals contract.
Absolutely. And I think that I would call today is the first day in a long time that this gold move, $35, $38 from low to high, was probably I don't want to say uncomfortable, because if you're long, you were thrilled with it. But it's the first day that it's exhibited some long-lasting energy it's holding on to. So both these seem to have a comfort level at these elevated areas. I think we can't reinforce enough, though. Silver is half of where it had been at its highs.
Yeah.
Doesn't mean that, at some point they're going to be both within 10% of their highs. That is wishful thinking, I think, in the short and medium term, but you have to be mindful of that context. That's why we kind of work in this nuanced shorter term trade against some longer term context. And I think it's really important. And you take a look at the scope of almost a 3% up move on top of where we were Friday. This is really a market that is exceeding expectations any way you want to manage or define those expectations.
A 3% up move in the small precious metals contract today, 300% of what it expected to happen in July. It moved. It was expected to see that $2.5, $3 move. Now, I don't have any tickers in front of me right now, but this small precious metals, I think north of $76 or $77 now, continuing to see huge moves to the upside. And you can see here that in that month of July, Pete, the high to low move was $11.70. In the first 6 months of 2020, the high to low move was $14.60. And that's to tell you that the range here in July, and now we're starting into August, and we're seeing very similar trading in precious metals. Pete, almost got to the full range of the first 6 months of the year. And that's a lot here in these precious metals. And we're going to dig a little bit deeper in a second, but most of it coming from that silver piece, right? Like this right here was the high in the small precious metals contract going back the last couple of years. And I think a lot of that was owing to gold, and gold just kind of getting more expensive. And this grind through the highs, a lot of that was gold. But Pete, this piece here, that's almost all silver.
Right. And that's why we work very hard to build a holistic precious metals exposure because we don't know on what day and at what point what's going to outperform. And this really encapsulates that idea of I want to be long precious metals. I don't have to look. We've looked at taking a piece out or the pairs themselves, and we know the challenge around that trade. Not only the capital use to express that opinion, but the challenge in building it and maintaining it. And oftentimes, because the mismatch of underlines, we have a good idea that it in essence doesn't pay us. So I like the simplicity. The amount of movement we have had has been tremendous. So to think about that, and I love the context there because you look at that from low to high, that's a $2,500 move. Now that's an outsized move in terms of, as you highlighted with the probability cone, but the equivalent move in either of the other two underlines was close to $70,000 or $75,000. So comfort starts here.
Yeah, when you think about the fact that in July /SPRE, Pete, did the first 6 months in range, and they netted out to about $2,500 or double this number here, $1,200. When you go and you double the move of silver or gold here to get the full year's range, you've got, like you said, $60,000, $50,000 in movement. And yeah, just in July, and this is why I want to ask this question, because not only do I think you're missing out if you're not getting the silver piece, but if you're choosing the wrong product here, you've got a $7,500 day today in silver. You've got at its peak gold up $4,000 today. And it's just very unwieldy when you talk about the dollar movement from this.
Frank, you make a great point, because you would think, well, if I was long either one, it turned out all right. Absolutely. We're not here just to catch the wave. We're really looking for products that give us the best expression of opinion, and that where do you hit that sweet spot is on a day like today. This is a perfect example of that holistic exposure really maximizes that trade idea, gives you the best return on your investment.
Yeah, and not even to leave out those micro products, SIL and MGC, both still far exceeding the movement in SPRE. It's almost like, they made these big traditional products and you're trying to fit in with those and they're a little bit too big. And then they try to make these micros and they're supposed to fit you better, but there's still, today's silver move at $7,500 in notional, that's still on the micro level, right. Pete, over $1,000, close to $2,000 on the micro level. And today's move in SPRE, Pete, $200. And that's when you're talking about extreme movement that everybody wants to run over and trade gold and silver. But if you don't ask how, you might get stuck trading a market that's moving, like I just said, $7,500 on the micro level. Oh, they made this micro for me, still moving $2,000 today. The small precious metals market moving $200. And this is going back to that conceptual piece. If you didn't have any silver in your trade and you just traded gold, it's kind of a boring year here, right? Up 10%, back to unchanged, and then just grinding to up 30% here. Silver, very interesting, hugging unchanged for the first part of the year, down 30%, and then gets back to unchanged, up 30%. And we'll see, it could extend. It's extending right now in that 30% move on the year. But you see that reflexive nature in silver, which brought this purple line here, smack dab in the middle of these markets, small precious metals. You got a nice 10% move lower, actually closer to a 15% move lower. Got back to unchanged, and now seeing that 30% up move, that silver piece, Pete, the construction of this, both small, like we're talking about on the notional level, but if you don't have that silver piece, you're not seeing this two-sidedness about 0%. I love trading markets, Pete, that have a range like this one in this 6-7 month window of give or take 20 or 30%, and they touch both sides of that and get back to unchanged. Now, like I said, this market could continue through this, but I know a lot of people putting on short positions, and if you don't have the silver piece, you could just see a continual grind here in gold. And also, if you're not sized correctly, you could be out of this trade in the next couple hours when you want to be in it for the next couple weeks.
And that's a great point, Frank. So with these bigger products, you're really trapped in a binary decision. If you're using one unit at a time, I've got to be long. Well, I've got three choices. I'm long, I'm flat, or I'm short. There's no nuanced management of an idea within that. When you have products you can assemble in pieces, which means there's small enough components that you can add several units, the amount of opportunities you have expands exponentially, because rather than taking them all off, neutralizing or turning your exposure over, you can lighten that long bias. I like them. They've had a nice run. I'm taking my 3 units down to 1 and seeing if I can recapture them. All but at no point have you flipped yourself to a short position, but you've dramatically mitigated your long exposure while not giving it all away. Now, certainly you can trade both sides of that, but it really adds flexibility. If you think about that, there is a whole different set of tools and the ability to manage ideas and expectations when you have units that are comfortably sized to be added together.
Yeah. And so what are you expecting here for August? Well, unfortunately, all 3 of these markets have already done half of what was expected for August, as these markets continue to exceed expectations. Like I said, SPRE up 2.25 here, the whole month of August expiration, or the whole month of August expectation, expected to be $4.75. Gold, the expectation $70, up $35 today. Silver expectations just above $3. Pete, they're up over $1.50 today alone, making this question of how do you trade silver and gold very relevant, because Pete, as expectations continue to get exceeded, and if you're not at a manageable risk level in terms of notional, if instead you went to trade a product that today moved $4,000 in gold, today moved $8,000 in silver, then Pete, your month of August is going to be over very quickly.
Right. And you're absolutely right. The idea that we've had these outlier moves to start the month where we basically consumed half of the expected range is not something we see every day. It's not something we see often going back several years. So the ability to take advantage of this opportunity is really interesting. I think the size piece, and you cover this so well with this particular visual, you can't get away from that. I don't know, really, as someone who's done this for 40 years, how when you start looking at silver, you've covered half that 16,000 in a day. You have a propensity to do the other half tomorrow. It's unbounded in terms of that. We look at July's actual versus expected, and that blowout. There's no reason we can't exceed these from this inflated area. The ability to control that size element, even for the experienced trader, is very challenging right now with these points.
Yeah, and you pose a great point, Pete. This is opportunity like we haven't seen in metals in the last, since I started trading in 2015. Since I started looking at futures, these metals markets have been relatively dead. And so for July to see this movement, and now it's continuing into August, the last thing I would want to do, Pete, is to miss opportunity that we rarely see in this metals market because I chose the wrong product. So definitely, when you're hearing stories about metals, ask yourself, how am I going to trade gold and silver? Because I know how I would.